Hello, this is Mi-jun from Midjusilon University. Let's start today's Midjusilon news for October 13th. Welcome to Mi-jun, where we continue to uphold the fundamentals of investing in United States stocks as always. Thank you, Mi-jun-sem, and everyone for joining us for the first broadcast of the new week. I always ask you all to leave a lot of comments. I know myself well, but I've never forced myself to do something I didn't want to do in my entire life. So even when I was working, if there was a boss or a hotel owner I didn't like, I would just hand in my resignation right away. So I've been running the Mi-jun channel for over 5 years now, and I'm really enjoying it. If I ever suddenly feel that running the channel isn't fun anymore or it becomes too hard, I would probably close this channel without any hesitation and focus on another part of my life. That's why I also need motivation from you all, and in order to keep running the Mi-jun channel with a happy heart, the comments and likes you leave are really precious to me. In that sense, I ask for your continued interest and support. Today, in that sense, I'd like to start by reading a few of the comments you left that really motivated me. On Mondays, we tend to get stressed and not feel our best. So I think starting off by reading these positive comments could be meaningful in its own way. The first one is from Sunny. It's a valuable comment left by someone using the identification Sunny P. I started investing in United States stocks after suffering quite a big loss with secondary batteries. Luckily, I found Mi-jun's channel and now watch nearly every episode. I still get anxious whenever my stocks go down. Earlier this year, I posted a comment that was somewhat of a complaint. When I watch Mi-jun at night, I sometimes doze off and I still haven't studied properly. I always think about that while watching Mi-jun's broadcast, which is like a lighthouse that always shines a light. Stocks are a place to learn about life. It's like sailing on your own, and every choice at every moment is always made by me. A good companion, a light shining on a vast road. Mi-jun's broadcast reminds me to live well together rather than just make money, and it's a place that makes me reflect on myself. I remember once even leaving a comment to Mi-jun's parents, saying they raised their son really well. At the end of the day, isn't Mi-jun the kind of place where you can quietly reflect on yourself over a cup of tea, pack your bag for tomorrow, and drift off to sleep peacefully? That's how highly they praised him. I read this comment and it made me feel so good. I tend to have a case of the Monday blues, but even on this Monday, I'm starting off in a really good mood. Thank you, Sunny Pang, for your valuable and uplifting comment. This time is number 2, a comment from a young subscriber with the identification IMG. Hello, Mi-jun, I'm a subscriber of 10 months. I've always thought I should thank you someday, and I'm finally leaving this message today. I joined a company in my mid-20s, and as I heard about investments from people around me, I naturally became interested. I tried to study by watching various YouTube channels, but many of them were sensational or not trustworthy. By chance, I came across Mi-jun Nim's video, and at that moment, I felt that something was different. It's not just about delivering objective facts, but the more I watch, the more I appreciate the in-depth and sincere content that includes thorough analysis of fundamental causes and principles, as well as Mi-jun Nim's insights. Recently, I showed it to my boyfriend as well, and he said the content is really good, so we're enjoying watching it together. My goal was to save 100 million won in my 20s, and I recently achieved that goal. Mi-jun Nim was a big help. In the past year, my investments, mindset, attitude, and financial habits have all changed significantly. Now, I accept both buying and selling as my own choices, and I've realized that the more greedy I get, the more I lose. Instead of getting swayed by short-term ups and downs, I analyze the reasons and use them as learning opportunities. Sometimes I see disappointing comments, but just like I used to be, I hope you don't let them bother you and just think, they probably haven't set their own investment standards yet, and move on. Don't forget that there are far more people who are helped and encouraged by Mi-jun. It's late, but my gratitude lengthened this message. Above all, please take good care of your health and continue to provide great content. This message, well, from what I can tell, you seem to be in your 20s or maybe early 30s, but if you hadn't mentioned your age, I would have thought you were in your 40s or 50s because your writing has such a mature tone. It was really helpful to me, and it gave me the motivation to keep working hard to create great content in the future. Once again, I sincerely thank everyone who left such wonderful comments. Here is today's United States stock news for October 13th. Let's begin. Before we get into summarizing the hopes for the United States stock market, I'll read some comments about questions that many of you have had recently, and I'll try to provide some answers. This time, it's a comment left by someone using the username Outsider. Hello. I've been listening since almost the very beginning. Late last year, I switched to another stock YouTube channel and finally joined the membership this year as an enthusiastic fan. Always doing my best. Today's stock news is... There's one rather confusing thing that I've been feeling a lot lately. It's about how, even after the Trump tariff issue broke out, the National Association of Securities Dealers Automated Quotations keeps trending upward thanks to the relentless growth of artificial intelligence tech stocks. But at the same time, the increasingly complicated domestic and international political and economic situations are making things even more confusing. As United States Treasury bonds and the dollar keep weakening, even the price of gold, the safest asset, is soaring. I heard that gold has been the most profitable asset so far this year. I'm sure Mijunim is well aware of this, but you've never mentioned it, so I'm really curious about the reason. You invest a certain amount in coins, which are still considered risky assets rather than safe ones, so I'd like to hear your thoughts on why you don't invest in resources like gold or silver. Always stay healthy, be happy, and thank you. There are probably others who have similar questions. So I think it would be good if I showed you a chart. Here I've listed the performance stock returns. The exchange-traded fund at the very front is GLD, which tracks gold. Since it follows the spot price of gold, you can basically consider it to match the price of gold. The second one is a representative Bitcoin exchange-traded fund. It's IBIT. IBIT has only been on the market for about a year now. There are no 3, 5, or 10-year performance records yet. And then there's QQQQQQ is an exchange-traded fund that includes the top 100 companies by market capitalization among the many companies listed on the National Association of Securities Dealers Automated Quotations Index. If there's one downside, QQQ doesn't only include tech stocks. You can think of it as including most sectors except for financials. So, since the Mijon portfolio focuses on semiconductors and artificial intelligence beneficiaries, I brought in VanEck Semiconductor Exchange Traded Fund. You can think of VanEck Semiconductor Exchange Traded Fund as an exchange traded fund that only includes semiconductor stocks. Let's look at these 4 ETFs and compare their past performances. As Outsider Nim mentioned earlier, the recent performance of gold prices has been remarkable. It has jumped over 10% in 1 month, beating other ETFs. Semiconductors rank second, but just at 8.15%. And over 3 months, it's 20%. But if you look at the 6-month performance, GLD, which tracks gold, is up 26%, while IBIT, which tracks Bitcoin, is up 46%. And it's the same story if you look at the 1-year performance. Over the past year, the price of gold has gone up by about 52%, but Bitcoin has risen by a whopping 94.9%. The long-term trend is even more interesting. Over the past 5 years, the price of gold has only doubled. So the rate of increase over 5 years is actually less than the increase over 3 years. But if you check Bitcoin's price, it surged 914% in 5 years. You can see that it created a 10-bagger, and if you extend the period to 10 years, while the price of gold only went up by 232%, the price of Bitcoin soared by a staggering 25,000% over 10 years. So if you just extend the period a bit, you can see that although Bitcoin's short-term volatility is a big issue, its rate of increase far exceeds that of gold. And if you look at a longer period, you can see that investing in gold ultimately yields much weaker returns than investing in stocks. For example, VanEck Semiconductor Exchange Traded Fund, a group of semiconductor stocks, has returned 248% over 5 years. But the price of gold only went up by 103%. And if you look at the 10-year performance, gold only went up by 232%, but VanEck Semiconductor Exchange Traded Fund rose more than 12 times. So looking at historical statistics, we often see gold rising in the short term. But if you extend the period and look at it from a long-term perspective, in the end, investing in stocks rather than gold, especially focusing on artificial intelligence beneficiaries like semiconductor stocks, is much more efficient. You can also see that Bitcoin had much better returns over the long term. And in a similar context, there's one more important question, so I'll read this question as well and then share my personal thoughts. This comment is from someone with a very positive username, I really like myself. You're similar to me, I also really like myself. Micho, isn't the current situation in the United States so unstable that it feels like it could collapse at any moment? They say the United States pays huge interest on its national debt. With uncertainty about how long the dollar will stay the world's reserve currency, should I sell my United States stocks and lock in profits? Due to taxes, I only sold about 2.5 million won worth per year, but now I'm considering selling everything and just paying the taxes. Now, you've expressed your concerns very clearly. As many as 7 people have liked your comment. So I can guess that there are quite a few people who share the same concerns. There were quite a few. About this, I shared my personal thoughts with you all a month or 2 ago when I answered a similar question. Actually, the concern I have is the exact opposite of this. Here, the concern is whether it's okay to keep investing in United States stocks because the United States might not be as powerful as before, or the status of the dollar might decline. The concern I have isn't about the United States, the dollar, or even the artificial intelligence companies we're investing in. It's about these companies. And the fourth industrial revolution, led by the United States, what worries me the most is that it might progress too quickly. We've been hearing the term fourth industrial revolution for quite a while now. In fact, this revolution actually began in November 2022. That's when Open Artificial Intelligence first released ChatGPT, and it's not even been 3 years since then. But in the past 3 years, artificial intelligence technology has been advancing at an incredibly fast pace. ChatGPT now has over 800 million users. In under 3 years, 10% of the world's population is using it. There has never been a technological revolution in human history that has progressed this quickly. What that means is, it's hard for us to even imagine how quickly this technology will expand in the future. That's something we can think about right now. Artificial intelligence has one key difference from other technologies. What is it? The unique characteristic of artificial intelligence is that it maximizes our productivity. In other words, our efficiency. So, what does this mean? Previously, 10 people were needed for a job, but now 1 can do it. With advancing technology, 1 person may soon handle work that once took 100 or even 1,000 people. Now, why is this important? For example, in the past, let's say there was a company called A and another called B. In company A, let's assume 100 employees were engaged in production activities, while in company B, 50 people were involved in production. So the amount of production these companies generated was 100 per year and 50 per year, respectively. That means the difference between the 2 companies was only 50. Therefore, if company B invests a bit more, works hard on investments, and the employees put in more effort, there was always a chance to catch up with this gap of 50. There was an opportunity. With artificial intelligence, productivity can increase by 10 or even 100 times. What that means is, in the past, the difference was only 50, but now, the value created by 100 people could be a lot, and the value created by 50 people is only 5,000. Therefore, the productivity gap between the 2 companies is no longer just 50 like before, but now it's 5,000. This also applies to individuals. In the past, if the difference between person A and person B was only 50 in the coming future, because of artificial intelligence, this gap could widen to 50-0 or even 50-0-0. So, this is a very important time. We need to increase our assets very quickly. Right now, by taking advantage of the opportunities given to us and using artificial intelligence to produce a lot, we have the chance to be on the upper side when the wealth gap widens in the future. But there's one problem, you know. In my case, I also try to maximize productivity by using artificial intelligence, but most people find it very difficult to use artificial intelligence for this kind of productivity maximization. They don't even know how to get started. So for people who have difficulty maximizing the use of artificial intelligence like this, in this era where artificial intelligence acts as a great amplifier of differences, if your productivity used to be 10, but you don't have the ability to turn that into 100 or 1000, now these people shouldn't just give up. Instead, there's one way, and that's investment. If we can't use artificial intelligence ourselves, and if productivity is being maximized through the use of artificial intelligence like this, then we can just find companies and invest in them. That's why we invest in Meta, Google, NVIDIA, and Tesla. So, the reason we focus our investments on American companies like this is because, in the end, due to artificial intelligence, countless people and countless companies, in the end there's a high chance that a huge gap will form and some will be left behind. So my personal judgment is that we need to invest diligently to avoid being among those who fall behind. Now, this might not be exactly what you asked, but I wanted to share my thoughts with you once again anyway. All right, then let's get started and summarize the outlook for the United States stock market. Today is Monday, after all. So I've changed the S&P 500 map to show the weekly time frame, and the number of stocks that have risen over the past week is very limited. As you can see, all 7 of the Magnificent 7 stocks are marked in red, and overall the map is colored in a very deep red. So we can conclude that the United States stock market was on a downward trend over the past week. Now, if you actually look at the performance over the past 5 days, out of the 11 sectors, only 2 recorded a positive return, while the remaining 9 sectors are all in the negative. Energy dropped by 4.15%, marking the biggest decline, followed by consumer discretionary at minus 3.83%, and materials fell by 3.35%. If you look further down, you'll see that tech stocks also fell by 2.2%, and overall, this sharp downward trend accounts for most of the decline. In fact, it happened on Friday. The S&P 500 map you're looking at now shows the trend for Friday alone. It's pretty amazing, isn't it? Not only is most of it red, but most of the red is very deep. It's a bright color. That means the drop was really significant. For example, Amazon plunged nearly 5% and Tesla dropped more than 5%. On top of that, Meta fell by 3.85% and Nvidia also plunged by 4.89%. So you can see for yourself that the overall drop was very significant. So there was a reason why tech stocks showed such a bad downward trend, and that reason was the Trump tariffs. When President Trump threatened to impose large-scale tariff hikes on Chinese products, the S&P 500 index, you can say that it dampened the market's risk appetite. As a result, the Nasdaq 100 index plunged by as much as 3.5%, and the fear index, VIX, surpassed 25 and 20 for the first time since April, reflecting the market's anxiety, according to the report. Now, there are various sentiment indicators we can actually look at. Most of them have plunged. As you can see, if you look at the VIX, it stayed below the 200-day moving average for a very long time. And I've mentioned several times that it's not a good sign if it rises above the 200-day moving average. On Friday, as it broke the 200-day moving average, the decline steepened. That's not all. Market breadth is the same. When the percentage of stocks with a good short-term trend falls below 50, that's also not a good sign. As you can see, it dropped to 36. When the support line at 50 was broken, the decline intensified sharply. That's how you should see it. The fear and greed index is the same. There was a range we've been watching for a long time, right? That range was at 50, but once 50 was broken, the volatility increased significantly. As market sentiment suddenly cooled rapidly, not only the S&P 500, but also the Nasdaq index and most of the leading stocks inevitably plunged. That's how we can sum it up. But there's a fortunate part. President Trump is making efforts to ease tensions with China. President Trump, despite the threat of 100% tariffs, is saying that everything will be fine and is trying to ease tensions with China. What about these conciliatory remarks from President Trump? They came right after China sent a warning message saying it would not back down if tariffs were imposed. That's how you can see it. And he also said this. In one post, President Trump described Xi Jinping, the president of China, as a highly respected figure. He suggested that both countries want to avoid economic conflict and suddenly changed direction by saying that the United States doesn't want to hurt China, but wants to help. Now, because of these moves, Bitcoin has surged by 3%, and Ethereum is also showing a sharp upward trend, rising by as much as 10%. It's not only the surge, the futures index movement is strong too. Dow Jones futures rose 0.87%, S&P 500 gained 1.36%, and Nasdaq climbed 1.92%. So with the United States stock market crashing last Friday, the performance of the United States ON top picks was also not very good. Only 4 stocks recorded a gain over the week, while the rest all showed losses, and there were quite a few stocks that dropped sharply. So personally, I bought 4 stocks last Friday. 2 of them were new purchases, and the other 2 were stocks I already owned and bought more of. Now, in today's broadcast, I'll talk about the 2 newly added stocks that I wasn't investing in before. The first stock I newly purchased last Friday is, you can think of it as a powerhouse in NeoCloud, specialized for the artificial intelligence era. About this stock, I actually notified my members in advance on October 6th that it was added to our watch list. All right, let's take a look at what kind of company this is. The new Miju on watchlist stock is now a Miju on top pick. So, which stock was added as a top pick this time? CoreWeave is emerging as one of the most notable companies due to the explosive demand for computing power in the age of artificial intelligence. The ticker name is CRWV, and it used to be a cryptocurrency mining company. But now, you can see that it has successfully transformed into a cloud provider specializing in artificial intelligence infrastructure. Now, let's summarize what kind of investment appeal it has as a beneficiary of artificial intelligence. First of all, specialized artificial intelligence companies with high-performance infrastructure and price competitiveness can be considered beneficiaries. CoreWeave's biggest competitive edge is that it provides specialized GPU cloud services optimized for artificial intelligence and machine learning workloads. When we think of cloud services, we usually think of major providers like Amazon Web Services, Microsoft Azure, and Google Cloud. What these companies have in common is that they don't just focus on artificial intelligence. They provide a wide range of services. They provide both artificial intelligence, related and general cloud services that most companies use all together. CoreWeave, however, specializes exclusively in high-performance computing, meaning just artificial intelligence. So during a time when artificial intelligence is advancing, you can see that they could actually benefit much more from it. Now, CoreWeave's main competitive strengths are listed here. First of all, the first point is that they can maximize GPU efficiency. So it's known to provide up to 20% higher performance in large-scale artificial intelligence model training and inference. And another thing is NVIDIA. As you probably know, CoreWeave has formed a close partnership with NVIDIA, so they are highly likely to secure the latest high-performance GPUs on a large scale. NVIDIA is investing in CoreWeave, after all. So it's like their own child, like their own offspring. So they're highly likely to be the first to provide high-performance GPUs. Now, another thing is cost efficiency. Compared to financial clouds, they say they can provide GPU computing power at up to 30% to 50% lower cost. For artificial intelligence developers or research institutions burdened by high infrastructure costs, this could be an appealing alternative. So, the reason to use the cloud from a small company instead of the three major companies, Amazon Web Services, Azure, and Google Cloud, is after all money. It's about the cost. That's how you can see it. Now, the second investment attraction we should pay attention to is the existence of large-scale contracts that have already been established. What about CoreWeave? Through large-scale, long-term contracts with key companies leading the artificial intelligence industry, they have already secured a stable revenue base and growth potential. The first is OpenAI. With OpenAI, the developer of ChatGPT, they signed a massive cloud infrastructure provision contract worth $22.4 billion, which is about 30 trillion won. The second is the recently announced contract with Meta. They secured another major client by signing a long-term contract with Meta worth $14.2 billion, which will last until 2032. These two companies are impressive, worth $22.4 billion and $14.2 billion. Combined, they're over $35 billion. So what about these large contracts? Beyond short-term sales, it's a strong investment point that increases visibility for future growth in a ranking-based way. If this contract is fulfilled, you can see it as having already secured tremendous sales in the future. And there's one more thing we shouldn't overlook. Due to the advancement of artificial intelligence models and the expansion of their application fields, the GPU and cloud markets are growing at an unprecedented rate. As I mentioned earlier at the beginning of the broadcast, I'm actually worried that this market might grow too rapidly and sharply. CoreWeave is one of the biggest beneficiaries of this market growth, and its sales are increasing explosively. In Q2 2025, sales hit $1.21 billion, more than tripling from last year, and annual sales guidance keeps rising. So, with sales soaring 3 times compared to last year, they managed to generate $1.2 billion in just 3 months. Now, even if you multiply $1.2 billion by 4, it doesn't reach $10 billion. But as we saw earlier, the A contract is $22.4 billion. Meta's is $14.2 billion. Therefore, compared to the current revenue being generated, we can see once again that the future revenue already secured is enormous. Now, of course, there are many investment risks. The first risk is that the debt is extremely high. CoreWeave's aggressive growth is being achieved through massive debt. They have borrowed billions of dollars to expand data centers and secure the latest GPUs. Because of this, the company is considered to have a vulnerable financial structure. That's why the short-selling ratio is also relatively high. With almost more than 8% short-selling ratio, high visa costs inevitably put a burden on profitability. This company is still running at a loss. Most of my previous picks have been profitable companies, so you can see that I've added this company, which is not only highly risky and has a high short-selling ratio, but is also running at a loss for the first time in a while. Now, the fact that their sales are concentrated on a few major clients like Open Artificial Intelligence, Meta, and Microsoft is also a risk. Because if any one of these companies suddenly drops CoreWeave, their sales could suddenly plummet. So we also need to consider this as another investment risk. Now, the third risk is fierce competition and high valuation. As I mentioned earlier, the cloud market was actually dominated by 3 companies: Amazon Web Services, Azure, and Google. These companies aren't just sitting still either. They're using their massive capital to invest very aggressively in the artificial intelligence infrastructure market. And another thing, you might remember a company called Navius, which was briefly mentioned in a previous Mahjong topic. In this way, NeoCloud is also gradually increasing. Since it's such a good market, you can see that there are a lot of new companies entering as well. So as of now, CoreWeave, it is said that the company has a technological edge over Navius. But in the long run, as these small companies continue to emerge, competition will likely intensify. That's how to view it. There's one more thing. Naturally, all artificial intelligence-related companies have very high valuations. This is a risk factor that could make stock prices fall sharply if negative events happen. That's how you should view it. So in conclusion, CoreWeave is one of the companies that provides high-performance computing infrastructure, which is essential in the artificial intelligence era in the most efficient way. Of course, its investment appeal is very high. And there's also a strong partnership with key players in the artificial intelligence industry. They've already signed long-term, large-scale contracts with Meta and Open Artificial Intelligence. I think this is also a huge investment attraction. However, behind this aggressive growth, there is high debt and customer concentration. We need to be aware of these risks. So in conclusion, CoreWeave is a company more suited for those who have strong confidence in the long-term growth of the artificial intelligence industry, rather than investors who are seeking stability, and those who can tolerate high volatility, who aren't fazed even if the stock drops by 10%. These are the people it's for. I'll conclude by saying that this is a stock more suitable for aggressive investors. Now next, let's take a look at the momentum of CoreWeave stock. What about CoreWeave's momentum? Right now, it's still at a buy. Out of 26 indicators, 2 are suggesting sell, 10 are neutral, and 12 are recommending buy. Now, if you look at the stock chart, it's approaching a very important point. After ending a deep correction period and forming a bottom, it's now attempting to return to an upward trend. If you look here, this isn't the first time this has happened. There was also a sharp rebound here, but it hit resistance at 150 and dropped again. And this time as well, it's climbing very hard step by step. It rose again, nearing $150. If it gets blocked again at 150, that's a double top. If it breaks down twice at the same spot, a stronger downward trend is likely. That's how you should view it. Now, but here's the positive part. As you can see here, the orange line has just crossed above the blue line. The orange one is the 20-day moving average, and the blue one is the 60-day moving average. A golden cross has formed, with the short-term line crossing above the mid-term line. This is a very positive sign. So after this positive golden cross has appeared, if it breaks above $150, then next, it can be interpreted positively as a good opportunity to test the previous high. Now, what's the second stock included in the United States top picks this time? It's a company called Bitmine Immersion with the ticker name BMNR. About a month ago, I also shared a post about Bitmine with the United States top pick members. At that time, so many people left questions about the company Bitmine. So I personally shared a post saying, this is what I think about it. Here's the conclusion. While pursuing stable value storage, if you see Bitcoin's future as digital gold, strategy is a more suitable investment. On the other hand, if you expect the future of innovative blockchain technologies like DeFi or NFTs and the explosive growth of the Ethereum ecosystem, Bitmine could be a more attractive choice. That's how I summarized it for you. And I also shared my personal opinion here. Both stocks affected by interest rate cuts, as Bitcoin and Ethereum prices rise, are expected to show a rising stock price trend. However, at this point in time, considering the tendencies of cryptocurrency investors, they tend to be more interested in trendy and popular. I think Bitmine's investment returns will be slightly better in the short term. I've expressed my very personal and subjective opinion like this before. Now, of course, I'd like to give a brief explanation about Bitmine. Bitmine, chaired by Topney and Michael Saylor's strategy, have one thing in common, a very strong similarity. That is leverage. So what does this mean? If we just invest directly in Bitcoin or Ethereum, when the price doubles, our profit also doubles. But if we invest in something like Bitmine or strategy, in theory, we get a leverage effect. What that means is these companies keep increasing their quantity. So if the number of Bitcoins held by strategy, which is run by Michael Saylor, doubles while the price of Bitcoin also doubles, our return won't just double, it'll actually quadruple. It's the same for Bitmine. We're continuously acquiring more Ethereum, So while the price of Ethereum doubles, if the amount of Ethereum that Bitmine holds also doubles, then ultimately our returns could increase up to 4 times. So you can think of it as a company that invests while taking advantage of this kind of leverage effect. So therefore, the most important thing is to look at how much cryptocurrency these companies actually hold. So just for your reference, Let's compare the amount of cryptocurrency held by Bitmine, Immersion, and Strategy. First of all, Bitmine's assets are in Ethereum, right? The current value of their Ethereum holdings is $12.6 billion. But the market capitalization of this company is $14.98 billion. What this means is about 84.1% of Bitmine Immersion's market capitalization is explained by the value of the Ethereum the company holds. That's how you should see it. Strategy is impressive, with their Bitcoin holdings now valued at $72 billion. It was just $30 billion recently, so it's impressive. Now the current market capitalization is $8.782 billion. So 82% of Strategy's market cap is made up of Bitcoin. So in conclusion, it's 84.1% now and 82%. There's not a big difference, but Bitmain is slightly more undervalued. That's how we can sum it up. Now let's take a look at Bitmain's stock momentum. Out of 26 indicators, 9 are very strong, 10 are neutral, and 7 indicate a buy. Now the current stock price is moving sideways. As you can see, at one point it soared up to 140 and then plummeted. Now it seems that the after effects have somewhat healed. As you can see, it's been staying in a box range for quite a long time. Now, here's the important part. Can it really break through the $70 mark here? It tried to break through once and failed. Then it went near the mark twice and failed. And even a third time, it got close and failed. When will it be able to reach 70? And if it goes above 70 again, what happens then? There's a chance it could make an exciting run toward the next stop again. Now, of course, it might take a lot of time until then. Right now, the 20-day, 60-day, and 200-day moving averages are converging. So whether the current trend turns upward or not is more important in the short term. I'll wrap it up here. The last content prepared for today is today's United States stock video. Today's video features Gears again. Recently, Gear's stock price has really hit the upper limit. Originally, Gear only mentioned positive things. Regarding this correction on Friday, the United States stock market plummeted. It would be good to hear directly from Gear through the dubbed voice about what evaluation is being made and what views there are on the future outlook. That's all for today's stock news on October 13th with Nariwa and Chui Soro. Thank you for joining our first broadcast of the week. As we begin this new week, I hope you all have a positive and energetic time. Tomorrow, I'll gather important information to help with your investments and see you again. Let's keep working together until we retire by investing in United States stocks. Have a happy day. Thank you.
Now let's listen to another major voice in the market. This is Tom Lee, co-founder and head of research at Fundstrat. Today is only one day, and we all know that. The bull market is still valid, but I'd like to hear your thoughts on today's market movements and the outlook going forward.
To some extent, I think the correction came a bit late. Since it has risen by 36% since the April low, I think today's decline is the biggest drop after more than 6 months of an upward trend. But I think the sharp rise in the volatility index is a positive sign. Today, the VIX surged up to 29% at one point, which is the 51st largest increase in history and actually falls within the top 1%. In other words, it's a sign that the market is looking for safe assets. So I think a good washout is happening today. There's no denying that the market is feeling uneasy. But unless there are structural changes, I see this correction as a buying opportunity.
Wow, it's surprising that this is the 51st largest move in VIX history. Why is it good for the VIX to react like this? What kind of signal is it?
This indicates investors want a safety net. As you know, the VIX is an indicator that shows the expected volatility of the top 100 large cap stocks. A sharp rise in the VIX is like the market saying, we want to sell all assets, but since we can't sell them right now, let's hedge by buying volatility. This kind of situation usually suggests a short-term bottom. We can't say for sure that today is exactly the bottom, but historically, after days like this, returns tend to improve after a week or a month. Does anyone think the market will be higher a week from now? If someone asked me that, I would say the chances are pretty high. I even think there's a possibility that it could be up more than 60 points a week from now.
Wow, that's really something, but actually this matches what we talked about earlier. Tom, even recently, whenever there's a correction, bargain hunters come into the market, and we've seen this pattern repeat where the market rebounds within a week after a one-day drop. This rebound has been repeating. Do you think the same trend will appear again this time as long as there aren't any additional variables like worsening conflict with China?
Yes, I believe anything is possible. In fact, the market managed to endure this period of uncertainty day by day between February and April and eventually recovered. The trauma from that time might still remain in the minds of investors. Of course, the issues we're dealing with now are by no means light matters, because the market is showing such big movements. But if you think about the fundamental reasons why stocks have been attractive over the past 12 months, it's clear. First, there has been innovation driven by artificial intelligence. Second, Wall Street is paying attention to blockchain innovation. And third, the Fed has started to enter an easing cycle. These three structural drivers of growth are fundamentally unshakable factors, even if there are geopolitical risks like a rare earth dispute with China. Market.
Are you asking if we hope the market doesn't close at the previous day's low? Right now, it's not closing at the low.
Today is Friday, and we have a long weekend ahead. Since many investors prefer to turn off their computers and enjoy the weekend, it wouldn't be surprising at all if the market closes near the low. But I don't see that as a special signal. As you know, it's common for the market to form a low on Fridays. Maybe the real washout will come on Monday, and that's when there's a high chance for a buying opportunity.
No matter what, the start of a dream is important. Be ambitious and grow little by little every day. Enjoy today's journey. Even if dark times come, I'm not afraid. Retire with United States stocks.